Yeah, and I want to thank the chair for calling this hearing and for yielding. I think this morning's hearing is going to be a very important information gathering session. At this point, we don't know whether legislation is going to come out of this, or if it does, exactly what form. But I do think it's important that whatever we do in this respect, that we get work together on it and try to get bipartisan support on both sides of the aisle. I think that's going to be important not only for the committee but also for the consumer and the industry. So that, I think, is going to be one of our mutual goals. Americans have access to some of the best financial services in the world, and a critical part of those services is the credit card. Consumers are becoming increasingly reliant on electronic forms of payment, and with the prevalence of the credit card comes some serious policy discussion. The credit card industry has expanded rapidly over the past decade, and there are 600 million cards in use today. My wife has a large part of those. The popularity of the credit card has allowed for an evolution of credit card policies and fees. There are literally thousands of products offered by credit card issuers with all different fees, rates, and features. With market competition and innovation, credit card issuers seem to be willing to adjust their products when the consumer dictates a change is necessary. Earlier this year, some of the biggest credit card companies voluntarily eliminated some of their controversial policies, such as universal default and double cycle billing. And I would expect that trend to continue as a consumer with a bad deal can shop around with ease. Due to the nature of credit cards, fees are a major component of how an issuer is able to recoup the dangers of extended credit with no collateral. It's fair for banks to constantly evaluate how best to charge for the risks associated with particular elements of borrowers. But what's not acceptable or fair is for the issuers to hide fees, policies, or practices from their customers. Disclosure is the answer, and that's why earlier this year, Ranking Member Baucus and I sent a letter to Fed Chairman Bernanke requesting a prompt review of Regulation Z. If consumers are aware of how their payments or lack thereof will affect their fees and interest rate, the choice is theirs to make. So I look forward to working with Chairman Maloney and my colleagues on both sides of the aisle to address the policy issues in consumer credit.